All right, good morning. Welcome back here to Trader Money. Great to have you aboard. Market is looking to open up about 8 points higher this morning, coming off the heels of Apple's earnings after the bell yesterday. And you can see here's the Apple thrust of about 10 points. And then, since then, futures, they've had a little bit of up and a little bit of down, but really haven't gone anywhere, overnight since the Apple earnings here. First day of a new month generally is a bullish day, generally is a day where you do see some forced money in from funds. I expect that we'll see a little bit of that here today. A little bit different of a first day of a new month, given the fact that Europe didn't have all its economic data due to a holiday schedule. But all of that will be reported here tonight or early tomorrow morning, depending on where you are. But the big news out there, Apple earnings, right? That's the big thing. Apple earnings. We have a company whose earnings are contracting. We have a company whose revenue is contracting, and the market's cheering. And I think it just speaks volumes about what this market is. In fact, quarter over quarter, minus 10%. Minus 10% earnings. Minus 10% earnings. I just we almost never see that from Apple, right? And I know much of that was expected, but minus 10% earnings. I don't even know what else to say to that other than minus 10% earnings. But you can see earnings slightly better than expected, right? Again, it wasn't something that wasn't expected. And then here on revenue. You can see slightly better than expected here with Apple, minus 5% revenue. And, they're looking at minus 2% revenue next quarter, right? So what's going on? Well, this is that transition from, iPhone. How many iPhones are they selling? iPhone this, iPhone that, to, this kind of services transition. And let's face it, they're printing money. They're their own treasury. They're printing money when it comes to the App Store sales and whatnot. And the market's finally starting to recognize that that's legit, that that's a thing, and that that's going to be around for a long period of time, and that it's very sustainable, right? It doesn't have to always be. It doesn't have to be about these hardware sales that are out there. And you can see, Apple's still trading at a 15 times earnings. So we're not talking about a super expensive stock or anything like that. It is going to go on the chase for a $1 trillion market cap today. Be right up there with Microsoft, and pushing on up. Now, it was a pretty good report. It was one that I mentioned yesterday. If they report a pretty good report, they'll go up, but it's not going to be a huge up. If they report a bad report, it's going to go down. It's going to be a huge down. And this morning, we're looking at the stock up about 5%, which is, just a modest up, here for Apple, and worthy, it definitely worthy of that report. You see that report, you see the price action this morning. It definitely makes sense. It's definitely warranted when it comes down to it. And it's going to be one of those where I don't think we're going to see a ton from analysts, in terms of changing ratings and expectations and everything. Here for Apple, I do think it's a little bit of a negative for some of the ecosystem stocks, of Apple, but nothing too dramatic there with it. We've had a few other earnings, come out, nothing earth shattering, but I'll come back here to it, show you some of them. This morning, not a whole lot that's important. We have CVS, right? That's not going to drive the market. Yum Brands, that's not going to drive the market. Royal Caribbean, not going to drive the market. We have some more tech after the bell here today. Some of your higher growth tech names are going to be reporting after the bell. That's going to be really interesting. I'm very interested to see what Squarespace looks like, here today and their earnings. But if we come here to yesterday evening, trying to get back here. There we go. April 30th. We can see that along with Apple, we had AMD report, we had Twilio report. Those are two pretty big ones there in terms of the group and their sector. They're not real market movers, but if you come in and look at the price action on these two, here's AMD, right, which is set to gap up. It's a little bit of a gap up, about $1.40, $1.50, but definitely a different report than Western Digital, different report than even Micron, different report than Intel when it comes down to it with AMD. I'll go through that a little bit more with you as as the week progresses here with AMD, because I think there's a couple really interesting things that can be taken from that. And then Twilio, which is kind of this absolute growth monster out there. This is a company that's trading at, very rich valuations because of growth. And, the initial reaction was down after the bell yesterday. And you can see, that just kind of reversed and pushed on higher. And this is a stock we've talked about the potential of getting to $500. And I know that sounds ridiculous on a $100 stock, but that potential of $500 is here when it comes to Twilio, and is something that isn't something you probably have to wait 5 years for. This is kind of that. This is that Microsoft type, grow Microsoft in the 90s, Apple in the early 2000s type of growth story here with Twilio, and it's not going away. It's not going away, and it's something where they're industry disruptive, and they're in an industry that is growing and growing rapidly. And they are, they are carving their piece out in a big way here with it. So, some pretty solid reports here. Now, yesterday I was with a buddy of mine, and he asked me. We were talking about the market, and he asked me, "Hey, do you think this is kind of like 1999 here in the markets?" And I looked at him. I said, "What makes you think that?" He goes, "Well, the market was crazy. It just kept going up and up and up." And I said, "Yeah, you're right. I mean, the market in 1999 just kept going up and up and up, and can't even get back there anymore on this." Let's come here. That was a long time ago now, huh? But it was one of those where, there was some irrational exuberance. Back in 99. Let's go 1997 here to now today. There we go. And we'll pull that up. But here back in 1999, we saw this kind of, just rip on higher of the markets and, on a percentage basis. This was a really big move. And he asked me if I thought the market was like this. I said, no, it doesn't feel like it. It doesn't look like it. It doesn't act like it at all, for a couple reasons. Number one, in 1999, there were actual pullbacks. In 1999, there were pullbacks in the market. There would be down days in the market, multiple down days in the market where, things would oscillate, things would correct, and then they'd go push to a new high. We don't really have down days in the market right now, right? That just doesn't exist in the markets here today. The other thing about 1999 is, some of the stocks that really led the way to new highs, they didn't have earnings, right? They didn't have earnings. Some of them, they didn't even have revenues, right? We were talking about these ghost companies, this new industry, these ghost companies, and yes, it was being rationalized that, hey, you know what, these are going to make money eventually. When they do, they're going to be great, grand, and wonderful. But we don't have those companies out there in the market right now. Let's face it, Apple is not a tech stock from 1999. Apple has real earnings. Apple has real revenue. Microsoft, yes, it's expensive. It's $1 trillion market cap, but it has real earnings, real revenue, right? It's not this kind of .com, hey, you know what, we don't really have anything here, but buy us because, in the future things are going to be good. Is the market discounting any real bad news similar to the way it did in 99, a little bit in 2000? Yeah, it is. But the market environment's it's very different. It's much more global right now. It's much more of a market that has some real earnings to it to kind of back it, and maybe most importantly, it has the Fed and U.S. president backing. Right? Yeah, we talked a couple months ago about the incentives of those in power in this market and what their incentives are to push this market. The U.S. president has every incentive to push the market higher. The Fed has every incentive for the markets to go higher, and that's not something we had back here in 1999. It was one of those where the Fed was a little more apolitical. The U.S. president wasn't. It wasn't as much about stocks and the importance of stocks. So those empower definite incentives to keep pushing things on higher. And yeah, I know you look at a chart like this and you think, man, there's got to be some pullback sometime. Well, we just had a correction. We're going into new highs right here. And yeah, are we going to have another one? Yeah, eventually. And it could happen at any time. But, this is a very different environment. In fact, I struggle to compare it to any other type of environment that we have seen other than 2007. Now, one of the things we saw in 2007 is we saw divergences come into the market. Divergences where, like what we're seeing now, this lack of participation, some divergences in transports, divergences in small caps where some of the key components of the market aren't keeping up. We saw that in 2007. In 2007, they were washed away, meaning they were just no, it's different this time, right? It's different this time, and we heard a lot of that in 2007. And subprime, yeah, we've known about that for many years. It hasn't come to a head yet, so it's not going to, right? Yeah, markets knew about subprime back in 2004. In 2006 it was growing worries. In 2007, it's starting to be just whatever. Nobody cares because subprime's been around for a while. And obviously, all the bearish comments on it, haven't taken hold yet, so they must be wrong, right? And right now, we're seeing a lot of divergences. We're seeing the issues swept away under the rug, explained away under the rug here in a similar fashion to 2007. And what does that mean to me? That just simply means nothing, right? Nothing. Those are what they are. And yes, if we see price action that suggests turn down, yeah, okay, those things are going to matter. But so far, this kind of Teflon market continues to just march on higher. And yeah, it's slow and low participation, and we could talk about all sorts of other attributes of it. But the reality is that is the price action right here, right now. Will it change? Yeah, it eventually will change, but there's still no sign that it will. One of the things that we'll see, when a market does shift changes or does, change gears or make major shifts, we'll see the first day of the month, have reversal action in it. And there's a potential for that today, but it's something where something that's still many hours off in terms of the market just had a big reversal on the first day of a month, and again, do you read a ton into that? Probably not here, just today in and of itself. It's probably not going to be a one-day turnaround. For things to turn around, we're going to have to start to see, some lower highs come into play when it comes to the indexes. Otherwise, the bears, they're going to have their sell-offs. And they're going to continue to look like this one that we saw yesterday. Well, snap down. No, okay. Right, and that will carry on forward here for the foreseeable future. It's been one of the best starts to the year ever in the stock market. Depending on how you gauge it, you can go back to 1998 or you can go back a heck of a lot further. But either way you slice it, any way you look at it, it's been one of the best starts to any year for the market from an index standpoint. We're hitting May. There's that old adage: sell in May, go away, come back in September, or for some, come back in October. And the reality is, when you look at the market over a very long period of time, that adage holds water. That adage makes sense. You buy in October, you get out at the end of April, and you move on. It's not something that I think holds a lot of water anymore. In fact, if I just pull up a seasonality chart here of the S&P 500 here over the last 5 years, right? Here over the last 5 years, you can see the whole sell in May, go away, come back in September. That just doesn't hold any water. It doesn't. I mean, here's May. It's been up every single year in the last 5 with average gain of 1.7%. June, pretty flat. July, the best month in the market has been July over the last 5 years. August has been the worst, but it's not exactly terrible. September's been pretty flat, but it's been Decembers that have been bad. December, Octobers, right? They've been some of the worst areas, but the summer times have actually been pretty good. If we go back over 20 years, right, you can kind of see this adage in play. Here's May, average gain 0.7. That's not bad. That's better than January. That's better than February. That's better than December, right? June has been historically soft. September has been historically soft, but July and August, they've been strong. So, to just kind of look and take a 100-year-old adage and say, well, okay, let's apply it to the market, doesn't make any sense. The markets are moved on past it, have kind of become sophisticated enough to move on past it, to understand why those cycles, used to happen, and to understand that, that's not something that has to happen anymore. The tendency that we do see happen in the summer, and that does continue to live on, is the fact that volumes really lighten up. Volumes fall off in a big way. That's the norm. When we start to see pullback during the summer month, the volumes will build. But, flat to slightly down to slightly higher, it's generally very low volume across the board. And that is the norm. That's what that's what summertime trade is. For the markets, especially when you compare those volumes to what we saw over the last month, what we saw over the last 6 months. If the market does continue to kind of drift higher, those volumes are going to be very very light. And what do light volumes mean, right? Light volumes means nothing's changing. That's all light volume means, is that nothing's changing. So if there is something changing, we will see it in volume. The volume will be a much easier tell, easier read, as we go forward through the summer months. So that's how I look at that, old adage and that, that kind of, sell in May type of stuff. And, is this market like 1999? No, it's not even close. Not even close. Maybe a little willing to sweep anything under the rug, sure, but it's not sweeping nearly as big of things under the rug as what was swept there in 1999. Thanks for hopping on. I'll jump on video here at about 11:30 Eastern. We'll go take a look at some of the trade setups that are out there. I'll also start the first of the 30 indicators in May series. So looking forward to doing that here today. We'll do that here at 11:30 this morning, and we'll go from there. I'm not making any live trades. I will share the trades that I make personally, but please expect that that'll be light. I'm not aggressively trading right here. I am going to use the next week and a half to kind of just throttle back a little bit, reset, before the next 100K challenge here. but you know me, I always have to have a finger in something. As I do that, we'll talk about those things that I do jump into. I did talk about the upcoming challenge yesterday. I talked about what was gathered from the last test, and I ended the last test early because I was able to gather what I wanted. It was very clear, very apparent, very early. Which options are the most sustainable for the challenge. It matched my thesis, right? And we got the little kind of 2, 3, 4 trades in a row down to kind of see that sustainability, and that's what I wanted to see. Got it. So said, all right, well, let's instead of waiting out the month of May, let's go out and I'm ready to go live trade this, and let's make it happen. So we'll be doing that. Feel free to check out that video from yesterday. It is in the archives there, and then I will be talking a little bit more about it here tomorrow as well. Thanks for hopping on. Have yourselves a great day, and we'll talk to you later. Take care.